just heard from the State Bank of India Chairman Rajneesh Kumar talking about moratorium and saying that it's getting better. But one big question across banks seems to be, how do you define what goes in the category of moratorium? There is no standard feature, which is perhaps why the whole moratorium question has spooked people and led to asking whether this could turn into a big problem for the banking sector, which is still grappling with an NPA crisis. To speak more on this, I'm joined today by a very special panel. Pratip Chaudhuri, former chairman of State Bank of India, speaks with us today. D.K. Mittal, former banking secretary, is here with us, as is Mythili Bhusnurmath, consulting editor, ET Now. So, Mr. Chaudhuri, on the one hand, the Reserve Bank says that a significant number of borrowers have opted for moratorium. Banks are saying the level of moratorium is going down. Do you see this as an issue at all?
Of course, it's definitely an issue. Because it's not to be trifled with. If you don't give moratorium, so many accounts become NPA. And RBI doesn't change the definition of NPA, so many accounts become NPA and will require provisioning, and there would be double money because you can't book interest on those accounts. So it cannot be trifled with and cannot be, left to what some bank chairman has said. It has to come as a clear policy direction in an unambiguous manner from Reserve Bank of India.
Okay. Mr. Mittal, I just want your take on the issue. I mean, banks have been very vocal, saying, please don't extend the moratorium at any cost. There is no requirement to do so. We heard from Mr. Deepak Parekh also recently being very vocal on this issue. What is the concern? And do you think that an extension should even be on the table at this point?
So, Tamanna, moratorium has a very great moral as well as legal matter. And I personally feel that it was done in very haste. Why I am saying so, there are 3 points. One, not all borrowers were affected uniformly. Some of the borrowers had capacity to pay, either as employees, their jobs were intact or the businesses were intact, but they did not pay or they don't opted out to pay. The second part is it is a contractual relationship between the borrower and the bank. Nobody, under no law, you can change it. And that is why Honorable Supreme Court, despite having a petition before them, ultimately wisdom prevailed on them and they stopped interfering with that. The third point is, once you take a moratorium, your period of repayment gets elongated at the end of it. And that's quite a painful thing for any borrower. So I would personally feel that moratorium extension is not required, but what is required is special dispensation to banks to really either restructure or change the period of NPA from 90 days to 180 days, which Basel III permits to certain categories of borrowers. That would be the right format with a reduction plan in that how 180 will become to 90 after some time. But a moratorium extension is going to be a very bad thing for the country, I personally feel so.
Okay, Mythili, I just want to get your take on what's going on. We heard, a statement from the finance minister today who said that a one-time restructuring could be considered. She also said that, taking cognizance of the request of the hospitality sector, for example, for an extension in moratorium. The RBI report also told us that a large number of corporates, availed of that moratorium, even if they may not have needed to. What do you make of the entire picture?
I think, Tamanna, it's important to remember that the RBI circular only enabled the banks to give a moratorium. It did not compel them to give it. So it was entirely within the domain of the banks to agree or not to agree, depending on what they saw as the merits of the situation. It was also up to the borrowers to use this moratorium facility or not, depending on their cash flow problems. No, moratorium is not a waiver. It is only to help those borrowers who, because of the COVID situation today, are having a cash flow problem. So borrowers, inform borrowers, and those who are not informed need to get informed that there is a cost to availing of the moratorium, because the interest continues to accumulate, something that the Supreme Court does not seem to have quite understood, but that is normal banking practice. So I think this is a mistaken notion to think that banks are compelled to give a moratorium. Yes, as Mr. Mittal and as Pratip also said, a restructuring facility or what should I say, flexibility rather to banks to restructure accounts wherever they feel the need. That perhaps might be a little bit better than just talking in terms of a moratorium, because the restructuring would be more all-encompassing. So certainly, I think there should be a slightly more nuanced discussion of moratorium. There is no compulsion either on the borrower or on the lender. It was only an enabler, and there is a price to be paid both by the lender and the borrower. Once we understand that, it's left to each lender and to each borrower to decide what best suits their situation.
But Mythili, then my question is, if it was as simple as that, why are banks so vocal and about no extension? If it is a cost to the borrower and the percentage of borrowers who are opting for it is reducing significantly, we've seen that from all the numbers that have been released, then why should it be an issue at all?
The answer is saying this because they do not get the interest. The interest will come to them only much later. So there is a cost to the banks also. So the moment the Reserve Bank of India says that you can give a moratorium, borrowers apply pressure on banks to say, please give us a moratorium. And banks worry that if they do not give the moratorium, they will in some way offend their good relations with the borrowers. So perhaps very often they give a moratorium where it may not be quite warranted. They are not able to resist the pressure from the borrowers. And they also perhaps fear that borrowers, even those who are able to pay, are not repaying. So I think this is something that the banks themselves need to answer for. There is a cost, definitely, because they're not going to get the interest income immediately. The interest income gets deferred. The repayment gets deferred. So there is a cost to the bank. So it is for the bank to decide, do we want to accede to the request from the borrower or not? Does the borrower understand the cost? And then take a view. So that is why I think borrowers, particularly large bankers like State Bank of India and large NBFCs like HDFC, do not want to feel that they are compelled to give the moratorium. It is up to them to decide. Nobody is forcing them.
Mr. Chaudhuri, I just want to get a sense from you on, we've asked the question on this show, are we sitting on a ticking time bomb? Because we really don't know what is going to be the recovery like due to COVID-19. On top of that, you have this moratorium situation and a clear picture will only emerge after September. What do you see as the hurdles here?
Actually, I think you are not alone in that predicament. RBI is in a similar predicament. So it is RBI is searching a black cat in a dark room. Now they're in the business of making policy. Let them make a policy. There are three ways. There is no fourth way. One is allow the moratorium to continue. Two is you, as Mr. Mittal said, that instead of 90 days, push it to 180 days. Third is do nothing about it. So it's a three multiple choices. You take any one of them. But instead of doing that, RBI is tossing this question all over the country as if there is going to be a referendum in this, and the result of referendum will decide what the policy will be. So it is a bit like, that EU referendum in UK. RBI, that is their new style of policy making. But I think, all accounts, they're quite affected. But if some people feel that it could be misused, then the best thing would be, as Mr. Mittal said, that you move the needle for substandard assets or NPA from 90 days to 180 days with a timeline to roll it back to 90 days in some point of time.
Okay. Mr. Mittal, I want you to come in on, are we looking at a scary situation over here? We have just sort of started on the tip of the iceberg talking about one-time restructuring. But the fact is that there are a lot of sectors which are going to take much, much longer to recover, if at all. Meanwhile, you have the whole IBC process in sort of deep freeze. What is the kind of concern that is valid right now on the health of banks?
So Tamanna, if we want economy to grow, which we want, the only way is that banking sector need to be ready to lend. Now, banking sector will lend only if they have capital to lend. And if we have heavy provisioning requirement, where is the capital to lend? So I think the biggest problem today is to make our banking system and the associated FIs ready to lend after August. Now, the problems are too many. Problems are, my thorough transportation or logistics is totally affected. ask industry after industry, there is a demand, but they can't take out goods. B, they cannot have their employees housed in the factory because nobody permits them. So it's a local situation, not government of India fault, but then the ultimately fault is of the national government. The third part is my exports are heavily affected. My agriculture prices, go to rural areas and they're down by 50%. So I think we need to bother about all these aspects that if they are not taken care of, where is the money going to come for borrowers to pay after August? We can't have money coming from outside. The money has to be generated. And if there's no economic activity, how they are going to generate? And that will result into large number of accounts slipping into NPAs that we start in September, as you said, September, October, November, the times when things start looking pretty bad. And if we say some of the sector which everybody know they are very badly affected, they will need a separate dispensation. Now we want hotel industry, restaurant industry, or hospitality industry. These are directly affected. Now, if we do not have a separate package for them, how are they going to survive? So I think we can't take only one policy and decide one policy for everybody. And sectoral packages have been done in past. We had for steel, we had for textile, we had for other sectors. So similar situation has to be dealt with here. So we have to have a combination of regulatory exemptions or maybe regulatory exemption for temporary exemptions, permitting them to restructure, permitting them to have this 90 days period.
Mr. Mittal, the packages that you're talking about, at least the second round of packages that we've seen, the policy there seems to be provide more credit to the sectors that are ailing. And these are sectors where anyway recovery is looking, very difficult right now. But the idea is to provide more credit. Do you think that there is another option that we should look at?
So, Tamanna, making credit would be useful if only industry is able to function. If they are not able to function, what do you do with the credit? So, I think the biggest problem to us to see that within the COVID situation, while we have to be concerned about saving lives, but we also have to see that economic activity also happens. So, if you slow down economic activity to an extent that it can't be restarted, then there's a problem. So, we have to find innovative ways with a compromise between life and economy. There is no way out. There is unfortunately no way out. And solutions are available. They have to be done at a very local level, but they are available. So why there is a problem in transporting goods from here for export to say to Mumbai port or to Calcutta port? Why? Why should any state government stop it out? So I think we have to have so many solutions, problems to be addressed. And unless we address them, economy will not start running. And if economy does not start running, they will not be able to pay. And if they will not be able to pay, whatever money you give to them, it's not going to come back.
I want to come back, Mythili, to, what Moody's has also said on the moratorium issue, where they do find it a matter of concern that such a wide, section of borrowers have opted for it. Do you see it as a problem, if there is no extension from September onwards? Or do you think banks have now adequately begun to provision for the large-scale moratorium or the loss of interest income, at least for now?
No, I don't think banks will be in a position to provide for it. And yes, Tamanna, let me take you a little back in history. In 1996-97, at that time also the NPAs had reached 16% of the total risk-weighted of the total asset portfolio of banks, and the number came down very sharply thanks to the recovery in the 2000s, the sharp recovery in growth that we saw in 2000s. This brought down the NPA level very sharply. And when you talk about 16% at that time, that was when the definition of NPAs was not remotely as stringent. So actually NPAs by today's definition would have been even higher. So a rising tide lifts all boats. If the economy were to recover, a great part of the NPA problem would be solved. At the same time, we do have this issue that the economy is not going to recover until, as Mr. Mittal said, we see the entire economy opening up. And that is going to take some time because we do see a resurgence of COVID in certain locales, which are very much part of those parts of the country where you have a lot of industry. So we are caught in this little bit of a chicken or egg situation. So I think to look at the answer of the NPA problem purely in terms of, what can we do in terms of regulatory forbearance, what can we do in terms of credit, I think would be a little bit mistaken. A lot of it is linked to the economic recovery. So I think that is where our focus should be. Meanwhile, some kind of regulatory forbearance as extending the NPA definition to 180 days, maybe changing the risk weights, and most importantly, giving some kind of sectoral packages to sectors like hospitality, hospitality, civil aviations, which are particularly hard hit, would help. So I think this is what we really need to focus on. And yes, borrowers will avail of the moratorium simply because COVID has hit almost the entire economy and hit it so badly. So borrowers will want to postpone the problem, and that is inevitable.
In fact, the interesting thing is that there was so much messaging to dissuade borrowers from taking moratorium in the first place. Talking about the compounded interest that they will have to pay out. But yet, a significant number has chosen to, because maybe in some cases people just want to preserve cash. Yes, Pratip Chaudhuri, you wanted to comment?
I think I don't understand why RBI is so dogmatic and hung up on one-time restructuring. I give you a small example, simple example. A car loan can be for 5 years, can also be for 3 years. Because we calculate that the maximum useful life of a car, not a taxi, personal car would be 5 years. So allow. Now, supposing I was quite exuberant at the time of taking the loan, and I thought that I will pay back the car loan in 3 years, and my neighbor took it for 5 years. Same car, similar. But then I realized that things are not as good as they were. So I asked for a rescheduling from 3 to 4, which is being done in other cases with the same assets. So why should it not be done? RBI allows it all over the country, all over the world. The regulators allow it without making it such a dogmatic. So in fact, in many cases, the accounts have the installments or the repayments have been rephased, keeping in mind the useful life of the asset. You can't rephase it over 100 years, but you take a look at the length of the useful life of the assets.
Okay. Yes, Mr. Mittal, you want to come in on that part? Some forbearance from the RBI is being sought. A big fear that moratorium will be extended right now, though we'll have to wait till 31st August to really see if that happens. And then the entire question, if the economy doesn't pick up, if, COVID-19 fears continue to accrue, then how are you even going to start recovery?
No, Tamanna, that's a very tough question. And nobody has a clear answer because there is nothing available to know what's going to happen. But let me remind everybody that in 2008 crisis, many decisions were taken where the impact was basically to financial sector primarily. And there was a compression in demand, in global demand. Domestic economy was not that much adversely affected, except because the exports were heavily affected. Now, there we gave dispensation of restructuring. One-time restructuring was permitted and that's it. Today, the condition of the economy is much more worse. And we do not know for how long it will remain. So I again repeat, we have to have a concerted effort to see that my economy restarts with some risk taking there. And of course, taking care of the health of the people. There are methods available. But simultaneously, we need to have regulatory exemptions, regulatory dispensations of both in increasing the period as well as giving one-time restructuring. There is no way out. And it should be a contractual relationship between the bank and the borrower, so that bank can understand that a genuine borrower needs to be given help and a non-genuine borrower not to be given help.
We will leave it at that, but this is, of course, an ongoing story which we're tracking very closely right here on ET Now. I want to thank all of you for joining us.
Thank you.